Thank you guys for joining us. This is our next in our series of property owner webinars. This time we'll be talking about understanding your notice of appraised value. If you have any questions, please use the chat box. At the end of the presentation, if we have time, we'll try to answer as many questions as possible. But just know that we've got another webinar coming up in the next couple of weeks, and we may take any of the questions that we don't get to and try to include those answers in that webinar as well. So let's get started with the notice of appraised value. What is a notice of appraised value? Well, appraisal districts are required to appraise property every year to determine the market value. And then we're required to report those market value findings to both taxpayers and the taxing units. And when we report it to property owners, to taxpayers, it's called the notice of appraised value. And that's provided to each property owner in April. And we usually send those out to property owners where their value has increased by at least $1,000 since the previous year. When we send it to the taxing entities, to the taxing units, it's called certification, and that's done later in the year in July. But for property owners, it's the notice of appraised value, and those are mailed out in April. So the purpose of the notice of appraised value is, again, we are appraising properties at market value just to ensure that each property owner pays their fair share of the property tax burden in proportion to the value of their property. So if you have a mobile home, you're not going to be appraised the same as a nice single-family residential house. We're recognizing the differences in the characteristics between the two properties so that you each pay your fair share based on the relative value of your individual properties. So changes in your property value may affect your tax bill, but they do not necessarily increase or decrease the total amount of taxes that you paid. That really is determined by the budgets that are set by the taxing entities. What the appraisal district does is it determines your fair share. So if your house is 1% of the total value of all the homes or all the property in Travis County, then you would pay 1% of the total tax burden. It's like this pie analogy here. Each slice is approximately the same percent, but the size of that pie makes a difference to the property owner. And again, the appraisal district's just determining the percentage that you owe of the total burden, not necessarily the size of that total pie. And we'll talk about that a little bit more as we go into the presentation as well. So your notice of appraised value, they were dropped in the mail last week, so you should be getting those in your mailbox this week. If you haven't received yours in your mail, then you can still go to our website, which is www.traviscad.org, and use our property search feature. All the values and information have been updated on our website, so you can also see it there if you have not yet gotten it in the mail from the post office. So let's go into your notice of appraised value. We are going to actually look at a sample notice and go through each section and explain each one to you. The top section, the very beginning, is just information. It has your name and address, but I want to point your attention to two pieces of information that you're going to need to use, particularly if you want to use our website. The first one is at the top right-hand corner, and that is your property ID. That makes it a lot easier, much more simpler for you if you're going to search for your property rather than having to type in your name or your street address. And sometimes you don't know if you live on, Main Street Court. Do you spell out court or is it abbreviated? If you have your property ID, it makes it a lot easier for you to do a property search and get right to your property and your property information. The other thing on that side of that header is the owner ID and your e-file PIN. So if you want to electronically e-file your protest with the appraisal district, and we recommend that because it's the simplest, easiest way to do it. It's more immediate and you don't have to wait. And if you want to get any evidence that the appraisal district has, if you e-file your protest, that gets shared back to you through the e-file portal. And so you get it a lot quicker, but you're going to need your owner ID and your e-file PIN in order to set up your user account. So if you have not done it before, we do have a video for how to e-file. So go to our website and you can get more information on how to do that. The next piece I want to draw your attention to is the fact that we do print on this, that this is not a bill. This is not your final bill. That bill will not be determined until later in the year, again, after the taxing entities have determined what their budgets are going to be and set their tax rates. This is just to report to you what we think your market value of your property is. It does not create or generate a tax bill for you at this point. So before we go into the next section, there's a couple key terms that I need to let you guys know about and explain to you. And you'll probably see the slide a couple times as we go out through the presentation. But the three key terms that you need to know are the market value, which is what your property would sell for as of January 1st. Your assessed value, which is the reduced or limited value of your property after the homestead limitation calculation. And taxable value, and that is the value after exemptions, and that's the one that is used to calculate what your property taxes will be. So these are three key terms, and this is information that we will share with you that will be on your notice of appraised value. But you kind of need to know what the difference is between all of those terms, because they become very important when you look at whether or not you want to protest or you want to make an estimate of what your taxes may be. So again, three key terms: market value, assessed value, and taxable value. So let's get back to a sample of a notice of appraised value. And you'll see that we've got a chart right underneath that information section. There's a chart, and there's a lot of information in this chart, and a lot of valuable and useful information to the chart in this chart. We're going to break this down for you and get into each of these sections and explain to you how they each work. So the first one that we want to talk about is the top box, and that's where it shows your market value and your assessed value. So let's focus on the market value first. In this case, the market value of the property is $434,562. So that's telling you the market value. Remember, our key terms is market value is what your property would sell for as of January 1st. This value is set fresh each year. We make an appraisal each year, and we do it as of the assessment date, which is January 1st. There is no limit to the amount of increase or decrease in the market value. Again, it is just a report of what we see homes in your area, in your neighborhood selling for. And again, it's reflective of what's happening in the current market and what other properties have sold for in the past year. And that is your market value. In Austin, the market value this year is being driven by record high demand and record low supply. So when we talk about record high demand, over the last 10 years, we've had over 30% population growth. And that's spurred by new job growth. And you guys have all heard the news stories about the new Oracle and Apple and Tesla and all the new businesses coming in, bringing jobs, and jobs bring people, and they're all looking for housing. But we also have a record low supply of houses. So there was a 73% decline in listings in 2020. That brings us down to near zero inventory level. Usually inventory levels are about 6 months, and that's considered to be a stabilized market. In Austin, we are at 0.4 months. That's 12 days of housing inventory. So there's not a lot of houses, but there's a lot of demand for the houses. So our median sale price in Austin was $514,000. And for Travis County as a whole, it was $490,000. That's a year-over-year increase of about 24%. And just to share for you what we're hearing from the record in terms of what that competition in the market is like, there was one realtor that was quoted in a recent article that said nearly every offer her client makes faces competition. Most of the homes are going for more than 20% over asking. And she said she recently helped a client with an offer for a 3-bedroom, 2-bath house that was listed at $515,000. And they pulled out all the stops. Their offer was for $100,000 over the asking price. And they waived the appraisal and the financing contingencies. And yet they still came in third out of 38 offers. Every single potential buyer offered more than the asking price, and 4 of the offers were for $100,000 or more over asking. What we're hearing from the market is that not necessarily 20% over asking is standard, but we are hearing that it is anywhere from 7 to 10% over asking being standard. And that is, again, just a factor of our Austin market with, again, record high demand and record low supply. But do not despair if you're a property owner and you have a homestead, because there are some protections for you that protect you from the increases, and that is your assessed value. This is the value that gets limited because of your homestead exemption. And remember, assessed value is reduced value of your property after your homestead limitation. It is different than your market value. The assessed value, again, is the one that is limited, but it is only for properties with a homestead exemption. If you don't have a homestead exemption, you're not eligible for the limitation. But if you do have a homestead, then you are eligible for the limitation. The first year that you qualify for your homestead exemption sets your base value for your limitation. This is a state mandated calculation that is done each year. And the calculation is, we have to each year determine which is lower, last year's assessed value plus 10% or the current market value. Well, again, given the Austin market and the way that the Austin market has been, it's never going to be the current market value. It is usually going to be last year's value, assessed value plus 10%. But let's do an example of this so that you can really see this. So in 2019, we've got this property had a market value of $369,740. The assessed value in 2019 was $261,799, and which was lower, the assessed plus 10% or the market value. Well, the assessed plus 10% was the lower value. So that made 2019 assessed value $261,799. You go to 2020, and we didn't recalibrate our models and we didn't change values in the appraisal district. So the market value stayed the same at $369,740. But again, we have to do the assessed value calculation, and that's a state mandated calculation that happens every year. So $261,799, which was the prior year's assessed value, plus 10% is $287,957. And we'll compare that to the market value for the year. So which is lower, 369,000 or 287? Well, 287 is lower. So 287,957 was the assessed value for 2020. Now we're into tax year 2021, and we did reappraise properties. The market is really being very active, very robust, and market values went up. So in this case, the market value went up to $434,562. The assessed value as calculated as last year's assessed value, so $287,957 plus 10% equals $316,753. And we're going to compare the market value and last year's assessed plus 10%, which is lower, the 434 or the 316. Well, the 316 is lower. So the assessed value for 2021 is $316,753. So there's a substantial difference between the market value and the assessed value. This is going to be different for each property owner because everybody gets their homestead at different times. Some people have been under the limitation for longer than others. So it really is individual to each property owner, but that is listed for you on your notice of appraised value. And it's important for you to pay attention to that because it's the assessed value less any exemptions that determines how much you're going to pay in taxes. So let's go into the next section of that chart. We talked about the market value. We talked about the assessed value, and those are really important. But let's get into the next section of this chart because that goes into some of the exemptions that you may be getting for your property and how that then equates to the taxable value for your property. And we'll go through an example. Again, taxable value is the value after exemptions, and it's the one that's used to calculate your taxes. Taxable value is what you pay your taxes on, and it's your assessed value minus any exemption amount, and that becomes your taxable value for that taxing unit. Now, your taxable value can be different for each taxing unit because each taxing unit gets to decide if they're going to grant exemption, and if so, how much they will grant it for. So for our most common jurisdictions that most people are in, we've got the Austin Independent School District, Travis County, the City of Austin, and Austin Community College. And we've got the Homestead, which is our most common, and our over 65, which is our second most common exemption. And you can see how those values are different for each one of those. For school districts, it's state mandated by law, they must grant a homestead and an over 65 exemption. But for the other taxing entities, it's local option. They get to choose. For the homestead, they get to choose. It can be any amount from 1 to 20%. It cannot be more than 20%, but you'll see that Travis County grants the highest, which is the total 20%. The city of Austin grants 10%, and then Austin Community College grants 1%. Now, if it's a very small percentage, the minimum amount of that exemption has to be $5,000. So that 1% is going to give you a minimum of a $5,000 exemption from Austin Community College. For the over 65, again, it is state mandated for the school districts. They must grant over 65 exemption. The state mandated amount is $10,000, but Austin ISD also adds in a local option of an additional $25,000 for their over 65 exemption. Travis County grants $85,500. The city of Austin grants $88,000 as a over 65 exemption. And Austin Community College will grant $164,000 in their over 65 exemption. And again, these are all amounts that are determined by the taxing entity. They choose how much of an exemption they're going to grant. So let's go back to our example and look for very specifically for the city of Austin, so you guys can see how those exemption amounts are calculated and what the totals will wind up being. So for the city of Austin, who grants a 10% homestead exemption, you'll take your assessed value, which is $316,753 times the exemption percentage, and that gives you your homestead exemption amount for the city of Austin, which is $31,675. You add that if you get an over 65, you'll add your homestead plus your over 65 exemption amount for a total exemption in the city of Austin of $119,675. You'll take your assessed value minus all exemptions that you grant, and that becomes your taxable value for the city of Austin. And in this case, it's $197,078. And you'll see that right there on the chart under the 2021 taxable for the city of Austin. That is your taxable value, and that's the value that will be used for calculating your taxes for 2021. Now, we don't know what your taxes will be because, again, those tax rates haven't been set, but this is what they will use when they do those calculations for determining what your tax bill is going to be. Same example for Austin ISD. Theirs is a little bit more simple because you don't have to do the percentage calculation, but you'll take your homestead exemption plus your over 65, gives you a total of $60,000 in exemption, and your assessed value of $316,753 minus $60,000 gives you a taxable value for Austin ISD of $256,753. Now, some of you guys with an eagle eye will notice that there's a number over here for the school district, and that's the freezer in your ceiling. In this particular case, this property owner qualified for their over 65 in 2007. And one of the benefits of the over 65 exemption is in the year that you qualify, your school taxes get frozen at that amount. So they may go below $917, but they will never go above $979. So that's a tremendous benefit to over 65 taxpayers because it actually limits the increase in the amount of taxes that you may owe for school districts. But again, it is only for school districts. It does not apply to any of our other taxing jurisdictions. Then at the bottom of that section, there is just a little explainer that explains the over 65 and the tax ceiling amount and encloses copies of some additional documents. On the next page, this back side of that page, you'll see a taxpayer impact statement. And at the very top, there are some definitions for some tax rates that you need to know. This is going to give you more information about when tax rates get set, how do you know what those rates are, and what do they mean to you. There is a no new revenue rate, and that's abbreviated to NNR. And that's the rate that would provide the taxing units with approximately the same amount of revenue that they received in the property on the properties in the previous year. It does not include the impact of new construction. It is just a calculation that says, you know, kind of like a reset. If all things being equal, if appraised values go up, your no new revenue rate should go down so that the amount of taxes stays about the same in either year. Then you have your voter approval rate, and that's the maximum rate that the taxing entity can go up without having to have an election and get voter approval. Typically, that is 2.5% for schools, 3.5% for cities and counties. if they adopt a rate that is above the voter approval rate, it has to be an election and it has to occur in the November election cycle. And a lot of you will remember that there was a voter approval election for the city of Austin last year, and it was approved by taxpayers. And that significantly increased what their tax rate is or is for 2020. And then there's the adopted rate, which is the rate that the taxing entities actually adopted. Below this section is a section that is called the Taxpayer Impact Statement. And this is based on 2020 information, but it kind of can illustrate for you how important those tax rates are and the impact that they can have on the amount of taxes that you pay. Now, this is 2020 information, so it's for last year. We don't have 2021 information yet because the taxing entities haven't adopted their tax rates or done their calculations. That will be done in August. But we do have a website that you can go to in August. It's travistaxes.com, and you'll be able to see all of this information. Again, that will be updated in August. But in this example, you can kind of see how the impact of the tax rates and what that has on you. So again, the NNR, which is the no new revenue rate for 2020, here's how much you would have paid in taxes based on the no new revenue rates. But based on the rates that actually got adopted, here's what your actual tax bill is. So you see the difference in how much more you pay in taxes based on the tax rates that actually eventually get adopted. So it's real important for you to pay attention not only to your appraised value, but also to the tax rates that get set, because they have a very significant impact in the amount of taxes that you pay. And again, don't panic because your appraised value went up. Again, the purpose of the appraisal is to determine your percentage. The actual budget and the actual bills get determined later, but go to travistaxes.com in August. That'll be updated in August, and you can get more information on the tax rates, what is being proposed, more information on the budgets and the budget hearings, and it'll give you an opportunity to provide feedback to the taxing entities about what they're contemplating in terms of what they're contemplating in budget increases and tax rate increases. And you can provide all that information, again, through that website, travistaxes.com, in August. Again, we are required by law to tell you from the legislature that the legislature does not set the amount of your local taxes. Your property tax burden is decided by your locally elected officials, and all inquiries concerning your taxes should be directed to those officials. And that the appraisal district is only determining the appraised value of your property. The tax rates get set by the governing body of each taxing unit. And again, that is a process that happens in August. And August 7th, we will have a website, travistaxes.com, will be updated with those tax rates so that you can see all that information. At the very bottom of page 2, you will see a breakdown of the appraisal information. It'll show you what your last year's value was and what the 2021 proposed value is. And again, this is repeating a lot of the information that you saw at the beginning of the webinar. The key ones that you want to pay attention to are your market value. And again, you can see the market value is 434, used to be 369. And then your assessed value with your homestead limitation. Again, you can see that at 316, there is a limitation and the exemptions that you are being granted on your property. There is at the very bottom a difference in the 5-year difference in terms of what the values have increased. And also, if you are a property owner and your property is appraised over $50 million and it is a commercial or a multifamily property, you can make a request to have any protest that you have heard before a special panel of the Appraisal Review Board. And that's just a notification letting you know that if you qualify for that, you can make that request on your protest form. If you have any questions, you can also contact the Appraisal District, and we give you the number for the Appraisal District. Also, if you go to our website, we've added a chat feature, so you can also call us or you can chat with us online. At this point in time, we are getting a lot of calls. We sent out over 389,000 notices of appraised values. So we are getting a lot of calls. There is a high call volume, but please be patient with us. We will try to get to every call that we get during this time period, but you may have a little bit of a wait. Then follows on the next page are instructions on how you file a protest. So you can file a protest by mailing it, and there's a PO box that you can mail your protest form. The deadline to file the protest is May 17th. Formal hearings will begin June 21st, and they'll be held at our location at East Anderson Lane They will also be held remotely. That is something that we introduced last year that is very popular with both property owners and property tax consultants. And our remote hearings, if you do a remote hearing, you can call in and screen shareability so that we will share the information that the appraisal district is presenting, and you can share the information all remotely online. And that is very convenient for property owners because you can do it either while you're at your office or while you're at home, and you don't have to come to the appraisal district and sit in a waiting room for that opportunity. It can all be done remotely and conveniently for you. We also recommend any property owners that want to file a protest, you can do it online. Again, there's more information about how to file a protest online on our website, www.traviscad.org/protest. And you also get more information there about informal meetings and formal hearings. The next page is information on your homestead. It'll give a description of all the available homestead exemptions that you can claim. And if you want to, we also did a webinar earlier this year on exemptions. So you can go to our website and watch that webinar on exemptions, and we'll explain more about each exemption and what it takes to qualify. But that brief description is also included with your notice of appraised value. You can still file for your homestead exemption. The deadline to apply is April 30th. However, we will take late applications for homestead exemptions up to 2 years late. So if you forgot to file your homestead exemption last year and you want to file it now, it's not too late. You can still file for your homestead exemption. Just make sure that you put the years that you want to apply for, put 2020 and 2021 on your application form so that we know that you're making a request for a late homestead exemption. Again, big benefit to the homestead exemption is if you've got the homestead exemption, you can get that limitation. And that limitation is shown in your assessed value. So it's not too late to file for your homestead application. You can either mail one in, or again, we have it online, and you can do a lot of that work for us online. If you're submitting a homestead exemption, please remember the most common thing people forget to do is to include a copy of your driver's license. You're required to include that with your homestead application, and the address on your driver's license has to match the address of the property that you are applying for an exemption. There's also the temporary disaster-related exemption due to the ice storm. If your property suffered more than 15% damage, you can do a disaster exemption request for a temporary exemption. The deadline to file that one is May 28th. And again, that is another application that is available online on our website, and you can submit that application there as well. The next section of the form is the protest form. A lot of it is pre-filled, but the important thing that we want to stress to you is the deadline to file your protest form is May 17th. So again, May 17th is the deadline to file your protest. And you can do it several ways. You can do it electronically, you can do it by mail, or if you want to come out, you can drop it off at our location at 850 East Anderson Lane. But the deadline is very important. You need to get your protest in by May 17th if you'd like to file a protest. And we'll be doing another webinar on May 5th to go more about the protest process. But I'll give you some highlights and just a brief overview of what the protest process looks like. Also included in your notice of appraised value is Taxpayer Remedies. It's a pamphlet that is published by the comptroller, and it explains a little bit more about the process, about the ARV appraisal review process. So that's another resource that you have in addition to our website that is included with your notice of appraised value that explains the protests and all the processes related to protests. The benefits of e-filing, and again, we strongly recommend if anybody wants to file a protest that you e-file. One, you'll get immediate confirmation that your protest has been filed and accepted. You can easily upload and review any evidence. Again, if you e-file your protest, we will automatically upload your evidence, any evidence the appraisal district has about how we appraised your property into the e-file portal, so you can get that there. You can also review and accept any settlement offers. If you e-file, we will send you an initial settlement offer, and then there's a possibility that you may get a second offer after an informal meeting, but this does expedite the process for you and makes it a lot easier for property owners. So we strongly encourage property owners, if they'd like to file a protest, to e-file and use our e-file portal. And again, www.traviscad.org. and you can get more information on our protest page. So an overview of the protest process after you receive your notice of appraised value, the first thing that you need to do is file your protest. And if you e-file your protest and you have information that you want us to review before so that we can put together an offer for you, you can also submit your evidence when you file your protest. The next step would be an informal process. You can review the e-file settlement offer. You also will have an opportunity to discuss it with an appraiser. And then if the appraiser discusses with you and makes an offer, they will make that offer on our e-file portal, and you can accept or reject that settlement offer. If you want to meet with an appraiser, again, we strongly encourage property owners to file their protest form as soon as possible. On our protest page, there's going to be more information about how you can get in line online to do an informal. Again, most of it's going to be done remotely, but you can get in line online. You can either schedule to go in the same day, or you can schedule a future appointment and you'll get a call back. There's a wait time if you're trying to do it same day. We will take scheduled appointments first, and then we'll handle anybody that is on a walk-in basis, online, in-line, online for same day, in the order that they're received. So there's a little bit more of a wait time versus when you actually schedule yourself for some time for an informal process. But again, you can do that on our website, and more information about how to do that is on our protest page. If you don't accept or you don't like the offer that is being made informally, you still have an opportunity to go before the Appraisal Review Board. What will happen is the Appraisal Review Board will send you a letter telling you when your hearing is scheduled, and you'll attend that ARB hearing, and you'll present your evidence. The appraisal district will present their evidence, and the Appraisal Review Board will make a determination of what the final value should be. Again, for an informal, again, we'll start those. We started those on Monday, April 19th, and they go through June 18th. And then we'll start formal hearings after that date. So again, April 19th through June 18th is the time that we have available for informals. And again, we encourage property owners to get in as soon as possible. There's always a wait and people procrastinate, but there's really, really high volume at the very end, and we may not be able to get to you if you wait to the last minute. So we encourage you, if you want informal time in an informal meeting with an appraiser, get in line, file your protest, and get in line as soon as possible. Again, you can schedule an appointment time, or you can get in line for that day's queue. We can only do one meeting per property owner, and in order to be able to do it informal, you have to have filed your protest. So again, we encourage you to do that as quickly as possible. We are already open for informal meetings, and you can get in line, just file your protest first. And the easiest way to file your protest is to do it online on our portal. And then finally, we will be doing another webinar May 5th at 11:30, all about the protest process. We'll go a little bit more in depth about the kinds of information that you can provide and how the protest process works, both for an informal meeting, what your offer may look like, and then also what the process may be for a formal meeting, so that we can get you prepared and you are ready to go if you choose that you want to protest your property for 2021. We've got just a little bit of time left, so I will answer as many questions as I can, but we don't have a lot of time. What we'll do is, again, we'll look at all of the questions that have been submitted. If I don't get a chance to get to your question, please come back to our May 5th webinar. We will try to answer all the questions that we have received then. And then also you can call into our customer service department as well. So one question that we have is what data is used for the this year's appraisal? So the data that we're looking at when we do our appraisals for tax year 2021, and again, our appraisals are always in hindsight. So we're looking at any sales and sales market data information that occurred from January 1st of 2020 through February 28th of 2021. So again, we're trying to get a good full year's worth of data, but we are looking at what has occurred since January 1st of last year through February 28th of 2021. If you are a property owner who recently purchased your property, one of the best indications of market value is what you just paid for your property. So if you just purchased your property and we've appraised it for more than your purchase price, e-file your protest and send in a copy of your settlement statement, and we can settle that at your sales price, assuming that you've got a nice arm's length market transaction and that it wasn't a duress sale. We can make that settlement, and that can be done pretty quickly for you. Another question is how many times per year are properties appraised or assessed? We only do our appraisals once a year, and January 1st is our assessment date. So as of January 1st, we're trying to determine what your market value of that property is as of that date. And again, we're looking at sales from January 1st of 2020 through February 28th, 2021 to try to make that market value determination. How can a homeowner get data on how much their house in their neighborhoods were sold at? And is that public information that you can request from our office? Texas is a non-disclosure state, and a lot of the sales information is confidential. However, if you file a protest, we will provide that information to you as part of the evidence packet that we have. We will give you the sales that we had in your neighborhood so that you can see what the properties in your neighborhood have sold for and how your value is comparable to those sales. So again, it is confidential information, but you can get that data if you file your protest. Again, the easiest way to file the protest is to e-file your protest, and then that information can be shared with you on a portal, and we will get that to you. Another question is, how do applications for permits and plans reviews affect the assessments? So we do look at, again, properties that are remodeled. A lot of that information comes from permits, and we do get permit information. Our goal is to appraise all properties fairly based on their market value and their condition as of each year. So if you have substantially remodeled your property, one of the ways we find out about the remodels is because of the permits that you're required to take out. So we will look at that information and take it into consideration when we are doing our appraisals. Builders selling new homes in a community, all in 2020, would it be fair to assume the sales price would be the closest approximation to the market value? Yes, we are looking to determine what is the market value, and the legislature has defined market value as being what the property would sell for as of January 1st, assuming that it is an arm's length transaction, meaning that it is on the open market and no one party is under duress to either buy or sell. That would be considered a market transaction, and that is what we would be looking at. Another good question is, why do some elected officials say taxes are going up because of increased appraisals? And that is, again, the appraisal district, we are only determining your percentage of the overall tax burden. And I think there's a lot of misunderstanding, even among some elected officials, about the role that they play in the tax burden of property owners. Again, appraisals only determine what your fair percentage of the overall tax burden is. What your ultimate tax burden is going to be determined by the budgets that are set by the taxing entities and the tax rates that they set in order to fulfill those budgets. So again, that no new revenue, it's kind of like a teeter-totter. If the no new revenue rate, as appraised values go up, the no new revenue rate should come down, so that in the end, it's revenue neutral. The appraisals are revenue neutral because we don't give them any more money. But if they adopt a tax rate higher than that no new revenue, then they are adopting a tax rate to increase taxes. And that's really important, and it's something that is often overlooked, or people are misinformed about that process, which is why we've taken a very aggressive stance in educating the property owners, because we want you to have all the information. Again, if our market value is not correct, the appraisal district wants to make sure that we get it correct. We encourage you to file a protest with the appraisal district. But if the market value is correct and you only want to complain about your taxes, that is not an issue for the appraisal district. That really is an issue about the tax rates that are being set and the budgets that are being set. And it's also an issue that we've got to look at internally in terms of as taxpayers. What services are we demanding, and what services do we think we may be able to do without? Because entities are setting their budgets to provide the services that we demand, and we also have to look internally about that. That is all the time that we have today. But again, if I didn't get to your question, we will look at all these questions and incorporate those in our next presentation. There's also a lot of that information is available on our website. And I encourage you guys to come to our next webinar. Again, that'll be May 5th at 11:30 about the protest process. And we will answer some more questions and provide you with more information at that point. Again, if you're not able to attend that webinar at that date and time, please know that we record these webinars and we post them on our website. So you will be able to go back to the website after that date and be able to watch that webinar. I thank you for your time and attention. We hope that we've been able to give you some good and valuable information. And again, we encourage you to come back to the website and to the next webinar that we do on May 5th. Thank you very much.